Carpel. I'm CEO and founder of both companies, and today we're going to have a live trading room open to trade stock and options using our technology. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. We have a few people from bar chart, so appreciate you guys joining. Chuck, Claude, Ernest, Fade, Fred, come years back, Larissa, Louis, Mario, Mr. Simon, and Tad. How you guys doing? Cherry Blossom, 100 Muffin, L Mark. All right. Disclosures are very important. Please read them. If this is your first time you see this slide, I encourage you to visit optionsclearing.com to understand the risk and suitability associated with trading stock and options. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. All right, trading psychology is important. I encourage everybody to have a pre-market routine, right? Before market opens, walk the dog, pray, meditate, do push-ups, get coffee, review your trading plan in writing, review your trading journal in writing. If you don't do it in writing and you need help, schedule one-on-one consultation with Keith. He, his background is options trading, and he specializes in one-on-one coaching, group coaching. He's excellent. So if you don't have a trading plan and trading journal, especially when the VIX approaching 30, and you haven't traded when VIX was 30, 40, 50, 60, it's very important to have some kind of a guidance. So take that opportunity, and obviously I appreciate you guys joining in live trading room. So trading plan is important. Two things to concentrate on: goals, right? And at this point, I would not, think about, goals. I would still review your goals in terms of months over months, quarter over quarter. But when the volatility goes above 20, when VIX is above 20, the most important is risk management. What is your possible drawdown in your portfolio, right? That's what I would concentrate. And rebalance your portfolio where you understand, if the market continues to sell off, how much exposure do you have to the market, right? And which asset classes will go higher, which asset classes will go lower, right? And the idea is that you cannot try to predict how long the war in Middle East will last, right? If you're trying to balance your portfolio based on your ability to predict how long the war will last, probably I'm not the right person to ask. And most people cannot do that, right? Most people cannot do it. You should look at game theory, right? It doesn't really matter what I think how long the war will last, or what Fred thinks, or Ernest. What matters is what is the majority of the people think, right? And you can go to betting markets, right, like Kalshi, and actually see, and we will go to that exercise. I actually didn't do it, but and you can see what a majority of the people think, right? And then you can structure your opinion based on what majority of people think. Whether you agree with them or not, that's irrelevant, right? You should try to predict what other people think and not what you're thinking. So, and ultimately, the market will move based on stock tweets or through social tweets from the current administration, right? If the current administration says we're in the middle of midterm elections, we don't want prolonged war, we don't want inflation, we don't want high energy prices because nobody's going to vote for us. They're not going to say it in that context, but with that idea, then the market will rally, right? It can rally, by end of the day. If the next tweet is going to be that, this is a one-in-a-lifetime opportunity, we're in the middle of the Purim, and, this is just settling the score for the past 50 years or for the past couple thousand years, however you want to interpret that, and this is the last chance, we got to finish our job, and it takes a little longer, maybe a few weeks, maybe a month, all right, then the market is going to sell off, right? So based on what these stock tweets are going to will come out, that's Happy Tuesday, Russ, sir. That's how the market is going to move, and it's completely outside of your control, right? So you have to be ready for both scenarios. For positive scenario that the war is going to end very quickly in the next few days, and negative, right, that the war is going to last weeks, maybe months, right? And then what can you do about that? Well, what you can do is cash, right? Again, yesterday I said if you were 30% in cash in November, December, you probably want to be 50% in cash. If you were 10, then now 30. Cash is important, right? Cash is the king, right? That's the main expression. You want to have cash because it's probably the reaction is going to be people going to overreact to the news, right? And most likely market is going to at some point get it to oversold levels, right? VIX is at 26 last time I checked, 28. So we're in October, November VIX level, right? Which is extremely elevated, but that doesn't mean that's where it ends, right? It could go from 30 to 40, right? Or from 40 to 50. We've seen, but you know that we are in elevated volatility, and at least short-term market is oversold, right? So it's important to have cash, and at some point when you see that there's no more sellers left, then that would be your opportunity to take that cash and start buying stocks that you want to own, especially longer term, right? And you want to look at the portfolio drawdown, number of positions and position size. I encourage you, if you haven't traded, especially if you haven't traded when VIX was at 30, only 4 positions at 2.5% exposure per position, 4 positions, 2.5%, and don't have all of your positions highly correlated to the stock market, right? Try to be diversified, right? And maybe one of these positions is going to be short, right? Maybe put back that QQQ put spread that I closed last week. Maybe buy inverse ETF if you're not comfortable trading options. Maybe buy energy, right? Crude oil or energy related names that you know are going to keep going higher, or defense stocks, you know that they're going to go higher if there is an escalation in the Middle East and the conflict lasts longer. Wait till end of day to rebalance portfolio, right? If you think market is oversold and you want to, close your short position and go long, wait till end of day, right? We had these swings, right? Like yesterday was a perfect example. In the morning we were down pre-market session, and then by end of the day we were positive, right? Today we're down, pre-market. By end of the day we could be positive, right? We don't know. So wait till end of day to make the major decisions about how to rebalance your portfolio. Do not sell naked options, right? Use spreads. Don't sell naked puts, naked calls. This is all for professionals, for people who have large portfolios and been doing and traded when VIX was 40, 50 many times, right? Then you can think about selling naked options. Otherwise, keep them as spread. If you have a stock, sell calls against it. If you have long calls, sell short calls against it. If you have long short put, leg into the long put to hedge your naked options. Do not chase the trade. Keep an eye, be self-aware. Ask yourself many times why you place in the trade, and try not to call the bottom, right? Look for signs of bottoming process, right? Keep an eye on how often you review your account positions, right? Those are all signs that you're trading on emotions, and we want to avoid trading on emotions, right? All right, so let's take a look. Market just opened, and SPX is at 67.72, right? So we talked about 6,800, right? Yesterday we were trading between 6,900 and 6,800, right? Nothing has changed, right? It's too early to make a decision. But we did break through the 6,800, right? And this was a low for year-to-date low, right? And December low. So we are trading below 6,800, 67.80, 67.70. The longer we stay, right? If by end of day, let's say by end of the day we close at these levels or lower, and tomorrow we close lower than these levels, that opens the door to 6,500. Right. So this is becoming a very important, what used to be a support. Yesterday it was a support. Now it's becoming resistance, right? Bulls want the market to rebound and stay above 6,800. Right? So that's resistance number 1. This is resistance number 2. And let's zoom out into weekly chart. And this is also 50% retracement. It's a 50% retracement from the September, October, November lows around 6,500 to the all-time high around 7,000. So the longer we stay below that 6780, the higher the probability that we're going to revisit the lows from September, October, right? So first thing first, and again, a lot of it just depends on, it's going to probably depend on the news, right? On one hand, we're in the middle of midterm elections. Nobody wants crude oil to be at 100 level, right? Probably Republicans will lose the elections if crude oil is at 100, and people have to pay twice as much at the for oil for gas, right? That will be negative. But on the other hand, you can't really win any wars in 2 days, right? This is not, Venezuela, where the conflict ends in 2 days, right? A lot of countries in the Middle East are, are being bombed, and that could last, longer. So for now, right, we talked about 6,800. And next level, people already hedging at 6,700, right? Beyond 6,700, you don't really have a lot of, you have $7 billion on 6,700, right? There was a lot more position at 6,800, 6,900, 7,000. Here, there's not a lot of positioning, right? So, and we are trading in negative gamma territory. And when we're in negative gamma territory, that means that the longer we stay in that territory, when the markets pull back, right, when the price is below gamma flip point, dealers are considered net short gamma, often from puts, which means they will sell as prices fall and buy as prices rise, right? So you're going to have these large swings up and down based on the news, And today, even gold, right? Indiscriminately, everything is down. You have gold down 4%. You have everything but United States down 4%. You have emerging market down 6%. Bitcoin already rolling over. Silver is down 10%. Let's go back. Crane. Drop in 2-year and 5-year, interestingly. Oh, no, sorry, it's delayed. Okay, so you have rise across the yield curve. It was expectation that, oil price, prolonged conflict, the oil prices will be elevated and will cause, the longer the conflict, the higher the inflation. Right? Ernest, good morning. And then we can ask Grok. Let's see what other people think. Based on betting. Of war into last several weeks. Okay, so 60%. Oh, let's just wait. So it's a flip of a coin, right? A little bit better than flip of a coin. But let's just see what the final answer is. Will be on May 31st. That's a problem. Polymer highest volume market. Ceasefire by March 31st, 61. Closure before May 32. No prolonged closure. Short-term half chance of solution within weeks. 25 strikes 12 days. For live update, check poly market and couches. All right, so a lot of majority people are assuming that this is a reflection of majority of the people. That's somewhere between 55 and 65% chance within weeks. Right. Let's go within days. The markets, what's the probability of war with Iran to last only several days? So obviously, if you think it's going to last several weeks, right? Longer than last time, longer than 12 days when we had a war with Iran, then this is the time to hedge, right? Because the sell-off is probably not over. If you think it's going to be like last time, couple of days, maybe less than 2 weeks, then you might just wait and see, right? Ceasefire by March 6, 4 to 5 days. 4 to 5% low but rising. By March 15, 2 weeks, 23 to 32%. By March 31, 45. I mean, 4 weeks is a long time, right? 4 weeks is a long time. And by April 30th, 80 week is 80%, right? If the Arabian Sea is closed for business for 8 weeks, oil is going to be at 100, right? Most people would agree with that, right? If it's 4 weeks, I think oil is also going to be close to 100, right? If it's over by March 15th, 32% chance, then maybe, for interest in poly market. All right, thank you, Fade. So, okay. So you can see 10-year yield is reacting. No new signal, right? It's staying in the well-defined range, descending triangle, right? I was actually more worried of the recession fears that if the rates drop to 3.5, that the market will sell off. The fact that it's stable, that's actually a good news. Obviously, if it goes to 4.80 or 5%, that would be a problem, right? If 10-year jumps to 4.8, we're probably going to have a correction, deeper, longer correction. High yield continues to drop, right? We have, again, September, October, same price action as QQQ, right? We're retesting October, November lows. VIX is, the high was what today? VIX, the high was 28, 27. So we were the same thing. So we're basically retesting October, November lows, whether it's junk bonds, high yield, right? Credit default swaps are rising. And QQQ is, I mean, it was 590 when Amazon reported earnings, and basically retesting same levels that we've seen in September and November, right? So 590, right? Very important to look at QQQ at 590 and see if that level holds. For now, we're not making new lows and we're holding. Spiders, same price pattern. Right, we're retesting the 2020. We're still far away from November, October lows, right? So that means that the market is not oversold yet, and can continue grinding lower. Remove. So if you draw the retracement from the last 2024 rally, so we're still distance away from the 50% retracement. All right, small caps are pulling back. Again, there's not really a support. I mean, next support is 250. So you have support at 250 where basically I'll give up all the gains since beginning of the year. Gold is under pressure, silver is under pressure. Regional banks are dropping. High yield, high beta is dropping. Emerging markets down 6%. Crude oil retesting 2025 high in crude oil. Nvidia dropped again below 180 level. Let's see, is there anything positive? Let's see. Metals and miners are down. Oil, oh no, even oil is down, right? Even energy companies are down. XOP is down. Metals and miners are down 7%. So this looks more of a like capitulation, right? Where everything is selling off and VIX is at 20, what was it? 27, right? Healthcare is pulling back, even safety asset classes, right? Healthcare is down, utilities is down, consumer staples are down, industrials down. Financials down 2%, materials down 4%, biotech is down, VIX is at 26, QQQ is down 2%, Spiders down 2%. Airlines are down 4%, right? High oil prices. Okay. And SPX is below 6780, right? So it's basically on its way to 6700, right? It's gonna retest 6700. All right. In terms of signals, let's see, did the model adjust? Stock forecast box. So in terms of 10-day prediction, I mean, it sees that the short-term market is oversold, right? The short-term is market oversold. It doesn't see, at least for now, trends have not changed to see a breakdown, which I agree. So short-term, I think market is oversold. Longer term, right? If you zoom out, we actually reran the model. So for the months of March, it doesn't see a break above. So you have 20 points to the upside and potentially getting to 650 or even 630 level, 620 level. So risk versus reward, there is more room to the downside right now than it is to the upside, right? And Dow is down 1,000 points. Yeah. So, and then, so volatile March and potentially April. Eventually, it does see that long-term momentum is still intact. So in terms of active trader for signals today, NOC, right? So air defense companies are going to continue going higher the longer the conflict stays, right? And you can see NOC is breaking out. It's 755 down 1.5%. I think one way to hedge your portfolio, you can buy NOC. Maybe I'll do that. Let me just add that symbol, Tradespoon logo. I think this could be one of those hedges, right? I mean, obviously, if the war is over, then NOC will sell off. But if it does last a couple of weeks, then I think NOC is going to continue going higher. So let's add NOC. To list of stocks. Okay. So you can find that on the yellow tunnel. And the signal is an aggressive power trader. So if you're an aggressive power trader, you have a signal was there last night, right? ADM, NOC, and energy, accidental petroleum again. But if you want to see what I trade, dynamic power trader. Right? Dynamic power trader, you should have NOC now here. All right, let's add it to Profit Accelerator. Okay, and then let me buy NOC. I mean, in terms of stop loss, you probably want to look at the gap, right? I mean, if it fills the gap, then probably the war is, people think the war is going to be over. Pretty volatile, 5%, right? I would put 5% stop loss around 720. 720, maybe 730. So 720, 50 points drop, you know, I can buy, what, 2 shares, right? So I can buy NOC by 2 shares on $10,000 account. A $10,000 account, if it drops to 720 based on market conditions and the news, I want to decide whether I want to add to NOC or exit out. Right? So that would be my thought process on the NOC and the stop loss. Now what happened? Okay, so 75.88, and it's a volatile market, so I would look for maybe selling half of the shares at looking for 2% profit, which would be $14. Let's look at the positioning for NOC. It's not a liquid name. So the problem was aerospace and defense companies in general, they're not liquid. So trading options, plus it's a very, one contract is 75,000. Most people have less than 10,000. So trading options, very difficult in aerospace and defense names. You can buy stock. And you can see, I mean, currently it's 757, 760. If it breaks this level, next level is probably around 800, right? So the next level, it will gravitate toward is 800. So you can close half of it. 2% would be 15 points. So 774. And I would close the second half of the shares. At right below that 800 strike, so 792. And if it drops, what did I say, 720, which is, it's not huge, it's evenly distributed. Biggest one is 700. So ideally, you might want to consider 700 not to be, well, definitely don't want to be down more than 2.5% at 700 strike, right? That would be a problem. So yeah, being 1% down at 720, 730 makes sense. Then I need to make a decision. If it gets to 720, is it because the war is over, or is it just because, you know, there is a capitulation or something? But you can make a decision. So that's NOC. Right, you can find these trades on Dynamic Power Trader. You should be able to find them under Profit Accelerator if you just trade in stocks. Then kind of you'll see the same orders. Or you can find them in Elite Circle, right? So active trader, aggressive power trader, these are signals, you manage them on your own. And then Dynamic Power Trader, Profit Accelerator, you actually see my trades. Okay. So let's continue. So now this is where you want to review your number of positions, make sure that you're not going to be down more than 10%, especially if you're new to trading. I mean, I have more than 4 positions because I'm A, a little bit more experienced, B, there's a lot of, you know, we have option service, stock service, so I try to show an example of both. But nonetheless, it's a real portfolio, so I need to manage it appropriately. So CARR industrials, I mean, they're obviously also under pressure. Let's see how CAR are doing. It's also rolling over, right? Kind of at 60 level. Let's see what my position looks like. So I'm down. Close to 2.5%. So I need to make a decision whether I want to hold. And it does have support around that 60 strike. I mean, one way I can do is I can buy a put spread, right? CR, not the most liquid name, but I actually do in my personal account, I put a put spread. So let's put a put spread for CRR. I would do $5 strike, go into April. Let's see, 55.60 put. 55.60 put will cost me, let's see, 70. It's pretty wide bid and ask range. Let's see, $1.70. Can I buy it for $1.70? It's a $5 spread. Okay, $1.59. Okay. So if CAR can hold the 60 level, right? I don't know how many positions are in. And again, option position in less liquid name is probably less important, but still people are trading. So biggest position is at 55. Okay, so I can make an assumption that unless there is a, you know, VIX goes to 50, but if VIX stays around 30, then probably 55 is where CAR will stop selling off at 200-day moving average. Next level is the 60 strike, right? So if the war is going to last longer, then probably that 60 strike will not hold, right? You have 2,000 contracts. Then the next, this is where majority of the puts are, right? 3 million are at 55 strike. So people who own CAR are concerned, so they're buying 55 put. That gives me kind of, you know, at least that this might last. So that would be 60-55 put spread. Put $1.59. So the maximum loss is $1.60. But then the stocks is going to rebound, and the maximum gain is, $3, right? If it drops to 55 and stays at 55, then I'll be able to reduce my losses by $3, right? 5%. So that's CAR. Let's see, FRT, right? So I'm trying to stay diversified. REITs, today everything is down, but REITs are still kind of, in uptrend, right? I don't see a lot of pressure to the downside. So FRT for now, I think it has been a good hedge. Next one is Halliburton. Not 100% sure why Halliburton is down today. Maybe just a panic, right, and sell off. When there's a panic and sell off, everything's is being sold off. So then Halliburton is 35. I do have a spread, 34, 35 spread. Let's see how the oil drillers are doing. XOP is slightly down, right, but still positive. Schlumberger. It could be that just, Schlumberger is down 4%. So kind of indiscriminate sell-off because people are panicking. They're getting on margin calls, right? A lot of people are buying on margin. So for now, I'm holding. It's a spread. JEPQ, right? I'm down on JEPQ. So it looks like JEPQ broke through the February levels, 2026 levels. Next level is 55. I probably want to hedge JEPQ position, and I can do that with something more liquid. I'm just going to go back and put back the QQQ spread that I closed on Friday, right? So I closed at 423. It trades at 580. So 590, buy to open, sell to open, 575, 575. Oops, no, not credits, debit. Change order. I'm buying 590, selling 570, that's a debit. Please. Okay. So to hedge my JEPQ position, I'm putting back the April 590, 570 spread. Was the idea that, well, JEPQ is already breaking down. QQQ is right at that level, right at the March, the 590 level. This is where we were during Amazon earnings, right? First reaction to Amazon earnings, it bounced back. If this level does not hold, 590 level does not hold, then we're going to, next level will be 580. 580. And we're already below 50%, we're below 38%. So it's a bearish price pattern, right? If we're gonna drop below 590 for a day or two, then we're quickly gonna go to 580, or next level would be 560. So for that reason, I'm putting back that hedge that I closed on Friday. If 590 doesn't hold, we could quickly get to 570. In terms of positioning, let's look at the position on QQQ. Same idea. Put wall 600, call wall 610. So the longer we stay below 600, right? If we close today, let's say below 600, and we close tomorrow below 600, that opens the door to 570 because, you have 590, right? Largest one is 590 put spread. So, it could hold, right? But in case it doesn't, then you can quickly drop through these strikes to 570. right? So 590, there's I mean, there's a lot more position at 600, right? So that now is becoming a resistance, right? So what used to be a support, what used to be a call wall, now becoming a put wall, right? So it's going to be, the longer we stay below 600, the higher the probability that the sell-off is going to continue. So it's important for current administration to tweet that we're going to resolve this, you know, we're ready to negotiate, right? The next bullish tweet would be Iran is ready to negotiate and we have achieved our goals, or we're very close to achieving our goals. Then we get above 600. If that tweet doesn't come in the next couple of days, we're going lower. All right, so that's QQQ. Let's keep on going. JEPQ, Meta. Meta is a problem because it's an option, right? I don't have luxury to wait, and not much I can do about hedging. And Meta is down 1.5%. It's not making new lows. It's staying at the support, but the problem is that my spread, the trade is going, you know, it's still down 50%. So I guess I could wait. It's trading $1.20. I have 680, 685. I mean, this is the position, like Halliburton expires this week, Meta expires in March in 3 weeks. So I have to make a decision. I guess I can just use QQQ as a guide to when I want to close this position. If we drop below, if we stay below 600 today, tomorrow, then I would close the Meta, right? We're right at that support. You know, let's remind me to talk about this tomorrow. If we're below 590 tomorrow, I'm inclined to just close the Meta trade. And then T-Mobile and USB. T-Mobile telecommunication, it's a stock-based dividend. I mean, I assume it's down. Oh, it's actually up. All right. Okay, so that's good. So not everything is down. T-Mobile is actually able to hold on to its gains, paying dividend. I have time, you know, assuming that this downtrend, you know, we're trading kind of in this channel, and we can get above 220, then, I mean, for now, T-Mobile is fine. USB and regional banks, together with small caps, are under pressure, right? They're very sensitive to interest rates, recession, inflation, doesn't like any of these names. And USB is dropping precipitously, staying at support level. I mean, same thing as Meta. If tomorrow, I mean, let's see how much position is there. Let's look at carry. Where is the big support? Let's see. And I guess I can put a put spread on. Another thing is, so 65, we broke through that level. Oh no, we're right at the 65 level. Okay, so we're right at the 65 level on the regional banks. That's the highest position. Okay, so I would wait and see what happens to carry at 65. Carry didn't exist. Why not? Oh, it's not here. I mean, it is a strong support, right? We're kind of right at that level again. So maybe just like QQQ, maybe it makes sense to hedge, right? The 65 strike. So, I mean, carry, I think, is more liquid, right? 21 million than UBS, USB. They highly correlated, so maybe buy put spread. 65-60 put spread, similar to CRR in the industrial. 11 million. They're both pretty liquid. 1.6 million. Let's see, carry. You can buy it, hedge it with IWM put spread. 3 million. Okay, so carry is more liquid. So I'm gonna do carry. Trading at the same level. Option, carry, vertical. Gonna go into April. It's $5 spread. Let's see how much does that cost. 65. So similar, $1.55. Buy to open. $1.55. So I'm buying 65, selling 60, and it's cost $50, $1.55. Nope, $1.60. Wide bid and ask spread, especially with elevated volatility. Market makers want to make money. $1.60, $1.65. In general, you want to trade spreads right now, right? Because if any news and the volatility could collapse very quickly, and these options can lose the premium. So buying single puts probably not the best idea when VIX is at 30, but spreads you're kind of mitigating. So 65, 60, especially if you assume that that 60 strike will hold, right? That 60, somewhere between 65 and 60, it's going to hold. I mean, people already buying 55 and 50, but majority is in 65, 60. So that would be a hedge for regional banks. CF I still didn't get filled. So CF, for whatever reason, is actually outperforming the rest of the market. Okay. Agricultural products, I guess, not being affected yet. Agricultural chemicals up 2%. Okay. So it's not an indiscriminate sell-off, but the dollar is going up. That's also an interesting news, right? So that trade away from United States, that trade is kind of over. And interestingly enough, people are looking for safe haven in dollar, right? Usually lately they've been looking at gold, and gold is actually down, right? And gold is actually down. So right now people are looking for, the only place to hide is dollar. Right? Dollar, strong move in a dollar, up, back up. And you can see it in the price action of emerging market, and they're selling off more than. All right, Fred, see you Thursday. All right, any questions? All right, if there are no questions, that's all I have for today. Thank you very much. Keith will be at the closing bell, and keep an eye on QQQ 590 level. More importantly, keep an eye, I guess, on the news, right? The market could move down, market can go up quickly based on these headline news that people will react to that. All right, thank you very much and have a great day.